Good afternoon, everybody. First order of business is that I'm going to be doing a strategy session with Charles Kirk of the Kirk Report on Friday morning at 12 o'clock Eastern Time, 9 a.m. Pacific Standard Time. So for anybody who's interested in participating, just click on the link in my client note, and there should be a link on my blog up in the next 24 hours as well. During his semi-annual testimony on monetary policy before Congress 2 weeks ago, Ben Bernanke had this phrase that caught everybody's attention. He said, "The economic outlook remains unusually uncertain." And that really captures the zeitgeist. Nevertheless, financial markets were able to put in a pretty good rally in July. S&P was up about 7%. Copper rallied from the high $2 to the mid $3. And Europe was the leader. That's because tensions over the sovereign debt crisis really eased in Europe, and that improved that showed in their financial markets, with European stock markets outperforming the U.S. stock market, and spreads on Portuguese, Greek, and Spanish sovereign debts narrowing compared to German debt. Credit default swap prices on the risky sovereign debts also narrowed. Second quarter earnings have come in pretty good, and so we've gotten a decent rally over the last month. Even so, the stock market can't seem to gain much traction. We're pushing up against the June highs around 1130. And if we can break through them, that'll be something. Otherwise, we might be looking at somewhat of a double top right there in a range between 1020 and 1130 on the S&P 500, within a broader range of 1020 to 1220 defined by the highs from April and the lows from early July. One thing feeding into the malaise is speculation about possible deflation. St. Louis Fed President James Bullard came out last Thursday and said that he thought we might be looking at the possibility of a Japanese-style deflation, and actually recommended a second dose of quantitative easing. And yesterday in the Wall Street Journal, they profiled a number of investors who are bracing for deflation. Notably, Bill Gross, who said, we're not bracing for deflation, it's happening. Procter & Gamble, the big consumer giants company, maker of stuff like Tide, Crest, Gillette, came out this morning and said prices were actually down 1% for the 3 months ending June 30th, 2010, compared to the year-ago period. Prices were also down for them 1% in the first quarter. This is unusual for Procter & Gamble. They sell premium products. They usually have pricing power, and you usually see 2 and 3% year-over-year pricing increases on a quarterly basis. So that definitely caught my attention. On top of the financial and economic stagnation, we're seeing increasing signs of political division and conflict. The Obama administration is going after Arizona's law to deal with illegal immigration. Los Angeles Times reported how Bell County city managers and city council members are paying themselves outrageous fees: $800,000 for the city manager, $400,000 and change for the police chief, $350,000 for the assistant city manager. Council members themselves are making $100,000, and this caused, of course, a huge firestorm in Bell, California, and across the country, because it just kind of symbolizes the fact that government employees now are kind of an upper caste. They have better salaries, they have better pensions, and it's the private sector that produces things, that makes things that economic growth, efficiency, well-being all depend on. They all pay themselves out of tax revenue, so it's a sign of a dysfunctional economy that government employees are actually better compensated than private sector employees in general. Massachusetts Senator John Kerry bought a $7 million yacht called the Isabel. He bought it in Rhode Island. He's docking it in Rhode Island because that way he can avoid paying Massachusetts sales tax and a 1% annual excise tax in Massachusetts on yachts. Rhode Island repealed its boat sales and use tax in 1993, making it a haven for yacht users. What's ironic about this is that Kerry has long been a proponent of higher taxes on the wealthy, and he supports the administration's agenda to let the Bush tax cuts expire for the wealthiest people, but apparently it doesn't apply to him. Also, Representatives Charlie Rangel and Maxine Waters have been on the front pages the last couple of days for ethics investigations. Maxine Waters being investigated for using her influence to steer $12 million in TARP funds to a Boston bank called One United Bank, in which she owns a whole bunch of stock and her husband was formerly a director. Charlie Rangel is under investigation for raising money from companies for an educational institution that bears his name. Nevertheless, the administration is upbeat, and they're out there, pushing the party line that they saved the day and they turned around the economy. And in an op-ed in today's New York Times titled "Welcome to the Recovery," Treasury Secretary Tim Geithner said, "The economic rescue package that President Obama put in place was essential to turning the economy around. The combined effect of government actions taken over the past 2 years, the stimulus package, the stress tests and recapitalization of the banks, the restructuring of the American car industry, and the many steps taken by the Federal Reserve were extremely effective in stopping the free fall and restarting the economy." But that's what everybody's calling into question over the last 3 months. How sustainable is this recovery? Is the economy really restarted, or was it just a kind of a liquidity boost? To me, it kind of feels like we're not in a bull market, we're not in a bear market, we're in a blah market.